Hi everyone, welcome to our New Zealand Payroll Basic webinar. The areas we will cover today are add a new business, the business IRD settings, leave categories, adding a new employee, importing historical gross earnings, having a look at the employee leave pay rate settings, process a pay run, specifically what annual holidays, sick leave, domestic and violence leave entitlements will look like within a pay run. Also, when leave is taken, what the calculations are showing in the contacts panel. And lastly, the IRD Payday Filing reporting. So that will be going through the new and departing employee details, the employment information, and the employment information amendment file. So starting with add a new business. So from your main menu, if you go over to the briefcase, down to add a new business, the following pop-up will appear for you to enter in your business details. The NZBN is the New Zealand business number. This is a unique identifier for your business. The NZBN is a 13-digit number. If you are not in a New Zealand registered business, then tick on the checkbox, I don't have an NZBN, as shown here. Enter in the name of the business that will be shown through the system, as well as the business legal name. The business legal name will be the name shown on pay slips. Then enter in the address. This is your New Zealand registered primary business address. If you do not have a New Zealand registered address, then tick on the checkbox International Address as shown here, which will then allow you to enter in your international primary address details. Then click on the Next Step button to the contact details. Enter in your contact name. This is the name of the person that should be contacted in regards to payroll issues for your business, followed by their email address. This is the email address that should be used when inquiring about payroll issues for your business. You can then enter in your contact phone number. This is the phone number that should be used when inquiring about payroll issues for your business. The New Zealand registered business, the phone number must contain 9 digits, including the area code. For the mobile number, it must be a maximum of 11 digits starting with a prefix of 02. If you do not have a New Zealand phone number, then leave it blank. Just make sure that the email address is provided. Once done, then click on the Next Step button to continue to your payroll details step. Your payroll details step. What are your standard work hours? This is the standard hours per day that an employee would normally work. The value is important as it is used in various calculations throughout the system, such as calculating leave rates. When does your work week start and end? What day does your work week begin for the purposes of timesheets, rostering, and to calculate leave rates? How often do you process pay runs? Here you can select the pay period under which your business processes pay: weekly, fortnightly, and monthly. You can create additional pay schedules later if you pay under multiple pay schedules. What industry does your business belong to? You can specify which industry your business belongs to from the available list. Once you have completed your payroll details, please click on the Create button. Our new business is all set up now. From here, you can now click on the Go to Dashboard button and you will be directed to your main business dashboard. We will now go through the IRD settings. So from your main dashboard down to Payroll Settings menu and the IRD settings here will take you to the IRD settings. The business IRD settings are required to enable payday filing, employee details, employment information, and employment information amendment reporting. The IRD number, this is your unique 8 or 9-digit business IRD number. Contact first name and last name, enter the contact person's first name and last name. Contact phone, enter in the contact person's phone number. The phone number must contain 9 digits, including the area code. For mobile number, must have a maximum of 11 digits and start with a prefix of 02. If you do not have a New Zealand phone number, then you can leave it and make sure that an email address is entered. The contact email, enter in the contact email's email address. With the Payday Filing method, select either manual file upload to the IRD or connect to the IRD via gateway services. Today I'll be showing you the connect to the IRD gateway services, so we'll select that as our option. And then lastly there is the IR345 filing frequency. This is automatically generated now by the IRD as part of Payday Filing. You can choose to activate this for information purposes by choosing the frequency for the IR345, which is monthly or twice monthly. Otherwise, you can leave it blank. And just remember to click on Save once that is done. Moving over now to the leave categories. Concentrating on the annual holidays, sick leave, domestic violence, and alternative holiday leave. Alternative holiday leave. An employee gets an alternative holiday if they work on a public holiday that would otherwise be a working day for them. An alternative holiday gives the employee a day off at any time. For alternative holiday leave, the unit type is set as days. Annual holidays. As per the Holiday Act 2003, an employee is entitled to not less than 4 weeks paid annual holidays after the end of each completed 12 months of continuous employment. As such, the leave category is set up as 4 standard weeks per year based on the employee's leave year, with the leave entitlement to start after 12 months of employment. Annual holidays will accrue on the employee's yearly anniversary date, with a maximum of 4 weeks for each leave year, and the entire balance will carry over to the employee's leave balance. Sick leave. An employee is entitled to 5 days paid sick leave commencing from 6 months after their employment start date. Additionally, the entitlement continues every 12 months thereafter. To clarify, it is 12 months beginning at the end of the 6-month period and not from the employee's start date. As such, the employee's leave category for sick leave is set up as 5 standard days per year based on the employee's leave year, with the leave entitlement to start after 6 months of employment. The system will automatically then apply sick leave entitlement every 12 months thereafter. Sick leave will accrue with a maximum of 5 days for each leave year, and will carry over a maximum of 20 days. So carry over the amount is the addition to the leave accrued balance for the leave year. So 15 days plus the 5 days accrued for the leave year is the 20 days. Domestic violence leave. An employee is entitled to 10 days paid domestic violence leave commencing from 6 months after their employment start date. Additionally, the entitlement will reset every 12 months thereafter. As such, the leave category is set up as 10 standard days per year based on the employee's leave year, with the leave entitlement to start after 6 months of employment. The system will automatically then apply domestic violence leave entitlement every 12 months thereafter, and that's from the 6-month anniversary, not the employee start date. Domestic violence leave will accrue with a maximum of 10 days for each leave year, but no balance will carry over to the next year. This means the leave balance will remain at 10 days or be topped up to 10 days upon each leave year. There is no such concept leave accrual per pay run in New Zealand. Leave entitlement will only accrue at the employee's anniversary date. For sick leave and domestic violence leave, this will initially occur upon the employee's 6-month anniversary and then every 12 months thereafter. For annual holidays, this will occur upon the employee's 12-month anniversary and every 12 months thereafter. Now we will go ahead and look at how we can manually add an employee to the payroll file. So back on your main dashboard. There are a couple of other ways you can add employees to the business. If you click on the down arrow beside the Add Employee button, you can see them. You can start the employee self-setup and import or export employees. But today we are going to click on the Add Employee option, which will launch the 4-step employee wizard. The first section is the personal details. You will need to add in all the personal details for your employee here. Name, date of birth, and address. There is an option to enter a postal address if required as well. You can then enter an email address and phone number. Remembering with the mobile phone must be a maximum of 11 digits and start with a prefix of 02. The employee notification is how you will notify your employees that their payslip is available to view or download. There are a few options. None and manual are the same thing, and this means the employee will not receive a notification. This setting can be used by businesses that print out their payslips and manually hand them out. SMS means the employee will receive an SMS notification, and if this option is selected, you'll need to make sure you have a valid mobile phone number entered for the employee, and be aware there is a charge per SMS per employee. Email is free, and the employee will receive an email to notify them their payslip is available. The last option here is for self-service. Selecting yes for this option is granting access to the employee for employee self-service portal. The employee will then be able to do things like view their payslips, apply for leave and expenses from the portal. They will also be able to download the WorkZone app to their smartphone, which is available on iOS and Android, where they will be able to perform these tasks straight from their phone. The next step is to set up your banking and KeyWeSaver details. Entering in the employee's bank details are compulsory. Bank details. There are 3 options of electronic via bank file, manual deposit, or cash check. Account name is auto-filled from the employee's name. You can manually delete the auto-filled account name and enter in the account name as well. The account number is 15 or 16 digits, which consists of the bank code, account number, and suffix. KeyWeSaver. You must automatically enroll new employees into KeyWeSaver and provide the employee information KS3 fact sheet to new employees. The employee can choose to opt out between week 2 and week 8 from their employment start date by completing a KeyWeSaver opt-out request form. It is your responsibility to verify that employees meet all requirements for enrolling, opting in, opting out, or taking a savings suspension. The KeyWeSaver options is listed via the drop down here. The employee contribution. The employee can select from 3%, 4%, 6%, 8%, or 10%. The employer contribution. As an employer, you must contribute at least 3%. You can contribute more if you wish by entering in the relevant value in the employer contribution field. If the IRD is already aware of the employee's KeyWeSaver status, then tick on this checkbox. Once the banking and KeyWeSaver details are complete, click on the next button to continue to employment details. You can enter all the employment details for your employee here. Select the employee's start date, then select the employment type options, which is full-time, part-time, or casual. The next field is where you can enter the primary location for the employee. You can set up different locations in the payroll file. There can be physical locations like Auckland or Wellington, or department locations like operations and sales. The employee's primary location is where the costings for their earnings will be attributed by default if no other location is selected. Then you can select the pay schedule for the employee. This is the frequency you will be paying the employee. We have 3 pay schedules frequency available: weekly, fortnightly, and monthly. You can set up your pay schedules via your business pay schedule settings, which will then appear in the employee wizard to select from. You will then need to enter the pay rate for the employee. You will have the option to add the rate as per hour, per annum, or per day rate. Then enter the number of hours the employee would normally work in a week. I'm going to enter 40 hours per week, which is equivalent to an 8-hour day. But you can add the number of hours that are relevant to your particular business and employee. It is essential that you enter the agreed number of hours the employee will be working each week. This figure also determines the leave rate paid for the employee. As mentioned, standard hours per day. This will use the business standard daily hours as the default. If the employee works different hours per day to that set in the business standard daily hours, then untick Use Standard Business Daily Hours checkbox and entering the hours per day for the employee. This figure also determines the leave rate paid for the employee. Then you can select the primary pay category for the employee. I'm going to select the permanent ordinary hours pay category for this employee. You can set up different pay categories based on the company structure and requirements. The ESCT rate percent. This will automatically determine the ESCT percentage rate once the pay rate details have been entered. However, you can override this rate by ticking the Override ESCT Rate checkbox. Next is the Irregular Employment checkbox. Tick this checkbox for casual employees working on an irregular basis, who are entitled to pay-as-you-go 8%. as opposed to the 4 weeks annual holidays entitlement. If this checkbox is ticked, then you must also apply the irregular employment leave allowance template associated. Leave allowance templates will allow you to set different types and rates of leave accruals for different groups of employees. If you want a group of employees to accrue 4 weeks of leave per year and a different group to accrue 6 weeks of leave per year, you can create a leave allowance template for both scenarios and then link each of the employees to the relevant template. Another benefit of leave allowance templates is if there are ever any changes to be made, you can just update the template and the changes will apply to all the employees that are linked to that template. A great example of leave allowance template is the irregular employment leave allowance template. This is a default template set up in the system, and this can be used for casual employees as it is set to not accrue the 4 weekly annual holidays as an example. With the irregular employment checkbox and the leave allowance template applied, the pay-as-you-go 8% will auto-apply in the pay run for an employee. If no leave allowance template is set, then the standard leave settings will apply. So in this case, it is 4 weeks annual holidays, 5 days sick leave, and 10 days domestic violence leave. Then you can select whether or not you want your employees to use timesheets. Once all employment details have been entered, click on the next button to continue to the tax declaration step. This section is for entering the tax code declaration information for the employee. The IRD number. Entering the employee's 9-digit IRD number. The source of income follows the same flowchart questionnaire as the IR330 tax declaration form on page 2. Alternatively, you can enter in the tax code field. Lastly, enter in the date the employee signed the tax code declaration form in the date sign field. Once all tax code details have been completed, click on the Done button. I will now go through the employee historical gross earnings export and import. The purpose of importing historical gross earnings is to assist in determining the average weekly earnings when an employee takes annual holidays, especially where the business has moved from one payroll system to a new payroll system. Please note that the historic gross earnings export has no impact or relationship at all with employee year-to-date earnings for the current financial year. As mentioned earlier, the historical gross earnings is used to correctly calculate the average weekly earnings as 52 weeks worth of previous gross earnings for annual holidays. To download the historic gross earnings export from the payroll dashboard, go to the payroll settings, opening balances, over to the export drop down here, and then down to historic gross earnings. Select the appropriate data type and file format. I'm going to select the template with employee data and then click download. When you export the template, you will notice there are 3 worksheets that cover each payroll frequency: weekly, fortnightly, and monthly. Your employees will be assigned to the relevant worksheet based on the pay schedule they are assigned to. Although you may not have each pay schedule set up in the business, the reason why we include all 3 pay frequencies is to cater for scenarios where employees may have been paid at different frequency during the 52-week period. As I had selected the template containing employees, the first few columns will be pre-populated using the data contained in the system. The next column to complete will be the last period ending, which relates to the period end date of the last pay run that was processed in the business's other payroll system. Once the date is entered, each period ending columns will pre-populate based on the value of the last period ending and the pay run's frequency. Any manual override of these values will cause an import error, so please do not manually update any dates. The next column to discuss is the period gross. In these columns, you must enter the employee's gross earnings that would constitute average weekly earnings. Each gross earnings must be separated by a pay period, otherwise the employee's average weekly earnings will not be correctly determined. The last column is to discuss is the period hours. In these columns, you must enter the number of hours worked paid by each employee for each relevant pay period. If your file includes employees on each worksheet, you must ensure all worksheets are completed. Otherwise, you will receive an error at import. Now to import the historical gross earnings template. Once you have completed all fields, you can import the template from the opening balances screen. Click on the import button, located on the top right hand side, and then select the historic gross earnings import from the drop down list. Then click on select file. Select the location where you've saved your template and confirm upload. Once the file has been imported, a status summary will be displayed. Now I will show you the leave pay rate settings. So if you go back to your main dashboard, and select an employee, down to the pay rate settings, The purpose of the leave pay rate setting is to configure the applicable calculation method to be applied in a pay run for daily based leave such as sick, domestic violence, alternative leave, and weekly based leave such as annual holidays for an employee. Then under leave pay rate, select the appropriate calculation method. The default settings for each employee is set to relevant daily pay and ordinary weekly pay agreed rate. Moving over to Payday Filing, the new and departing employee details reporting. You will need to provide new and departing employee details to the Inland Revenue. These details need to be submitted on or before any new employee's first payday. As shown before in the webinar, I had the Payday Filing method option connect to the IRD gateway services in the business IRD settings. To start reporting your new or terminated employees, go to Reports, IRD Reporting, Employee Details. So back on your main menu, Reports, IRD Reporting, Employee Details. All the employees that need to be reported under the Employee Details report will appear on screen. You will need to connect to the IRD gateway services to start using this service. By doing this, you can click on the Connect button here. The following pop-up appear. Please confirm that you wish to connect to the IRD gateway services by clicking on the OK button. Clicking on OK will redirect you to the My IR login page. You will need to enter in your business My IR login and password details. You must log into the My IR via the payroll system so that the integration between the IRD and the payroll is connected correctly. This is just a one-time connection process. Unless the client's password has changed, then you will need to connect again and input the new login and password details. Please note that if you send the My IR URL link to your client, then it will not be integrated or connected correctly between systems and you will receive an error. Once you have successfully entered in My IR details, you will be directed back to the Payday Filing Employee Details report page, which will show you are now connected to the IRD gateway services. You can now start lodging your employee details directly to the IRD. New or departed employees will automatically appear on screen for your review. Alternatively, you can use the report filter options, that is, filter by from and to date or search by the employee name and then click on the Run Report button. Once you have reviewed the employee details, you can lodge new, updated or departed employee information by clicking on the Upload to the IRD Gateway Services button as shown. The following upload complete confirmation will display, and all employees listed within the Payday Filing Employee Details screen will then disappear from the screen upon successful lodgement to the IR. Due to the IRD restrictions on the number of employees that can be reported at a time through gateway services, you may need to press the Upload to the IRD Gateway Services button again to then report any remaining employees that are still showing on screen. Once all employees have been reported to the IRD, the employees' names will no longer display on screen as you would see now. Now that we have reported our new employees to the IRD, we can now move on to the next part of the webinar, which is processing a pay run. So from the payroll dashboard, you will need to click on the new pay run option. This pop-up screen will appear where you will need to configure the details of the pay run you would like to process. You will need to select the pay schedule and then the pay period end date. This end date will also flow on from the last period ending date entered from the historical gross earnings export, import as well. When creating a pay run for the first time, you will need to select an end date that is in line with the work week you would have set up on the business details page, and then the system will automatically pre-populate the dates for subsequent pay runs based on the pay schedule frequency. Then you will need to select the date the pay run is going to be paid. This is what the pay run looks like once you've created it. You can see here the pay schedule and pay period dates in the top left corner. You then have the relevant pay run tabs across the top here. The Actions tab is one I will come back to in a moment. The Filter tab will allow you to filter the pay run to show only certain employees in the view. The pay run can be filtered by any of these options. Or you can also filter by the employee name. Then you will see the Warnings tab. If there are warnings in the pay run, it's always a good idea to make sure you do click on this tab and look at the warnings. Some may not require any action from you, but if they do, there will generally be a link to follow to fix the issue. If there are any pending leave requests within the pay period dates, then the Leave Request tab will display. You can approve and apply the leave requests to the pay run by clicking on the Apply. If you apply the leave request into the pay run, you'll get an additional pop-up which will show further details of the leave requests. Once you have reviewed the requests and are happy to proceed, Apply Leave button will then populate this into the relevant employee row. Back here on the Actions tab, you can see the Finalise option. So once the pay run is complete, you can finalise it. At this point, you also have the option to delete the pay run. Once a pay run has been finalised, there is no option to delete the pay run. And you will also need to be aware that if you do delete a pay run, this cannot be restored or recovered, so make sure you are confident when deleting any pay runs. There is, however, an option to unlock a pay run after it's been finalised so that you can make any adjustments. I'll show you how to do this later. The next option here is the Pay Run Actions button. Here you have a couple of other tasks available in the created pay run. Here you have the options to add a message, add an employee, adjust the pay period dates, import timesheets, export or import a pay run. There are a couple of reports you can access, and then you can view the draft pay slips if you need to have a look at them before you finalise the pay run. Underneath all these options, there are all the pay run details for all included employees. You will see all the employees' names listed down the side and all the headings for the included information across the top. If we click on one of the employees' names, this will expand their earnings so we can see the details of the earnings. Some of the details here includes the pay category, the location, the number of hours, and the hourly rate the employee is being paid. As you will notice, that leave does not accrue per pay run. This is intentional as it is not a concept found in the Holidays Act 2003. Looking at this employee, they have accrued their full annual holidays entitlement. The annual holidays entitlement will automatically kick in the relevant pay run period that the employee's employment anniversary date falls within and will then be included in the employee's leave balance. Over to the next employee, sick leave and domestic violence leave has accrued in full. This will automatically kick in the relevant pay run period of when the employee has reached 6 months after their employment start date, and also the entitlement continues every 12 months thereafter. Note that it's 12 months beginning at the end of the 6-month period, not from the employee's start date. Sick leave will also be capped at 20 days and domestic violence leave is capped at 10 days. Sick leave and domestic violence entitlement will then be included in the employee's leave balances. Looking at an employee who has taken leave and the calculations shown behind that. So this employee has taken sick leave of 2 days and annual holidays of 1 week. In the pay run within the leave taken section, if you click on the I icon, the leave unit conversion panel will appear, which will show you the leave units of days or weeks converted into hours. The leave unit conversion calculation is based on the employee's basic or advanced standard working hours per week and hours per day settings within the employee's pay run default screen. If using the employee's basic standard working per week, hours per day setting, the leave conversions will show as follows. It will show the leave information. So the dates which the leave is taken, the category in which the leave was taken, in this case sick leave, and the unit conversion. This will show the days and weeks taken converted into hours. The hours is based on the employee's standard working hours as indicated on the employee's pay run default screen. The leave estimate section. So the number of weekdays. This is the number of leave taken. Of those days are X public holidays. So if this falls on any of the public holidays, it will indicate how many days which the leave falls on a public holiday day. And also the leave estimate, which is 2 days in this example. This is then followed by the calculation method. So weeks or days. If weekly based leave, the calculation determines the number of leave days taken divided by the days in the work week. If daily based leave, the number of work days of leave taken. The weekly hours or daily hours. So if weekly based leave, this is based on the standard weekly hours. If daily based leave, the employee's daily working hours will show. The standard weekly hours and the daily working hours are both defined in the employee's pay run default screen. Otherwise, the default use is the business standard hours. Then lastly, you have your hours or total hours. If weekly based leave, the number of weeks taken multiplied by the employee's standard weekly hours. If daily based leave, the number of days taken multiplied by the employee's standard working hours per day. Once again, this is taken by the standard weekly hours and the daily working hours from the employee's pay run default screen. Otherwise, the default used is the business standard hours. And here's just an example of your weekly based leave for annual holidays and what the calculations would look like. If you click on the support article link here, this will refer you to a detailed support article of how this is calculated. Moving to the earnings line. When annual holidays is processed, the equivalent earnings line will show an eye icon to the right of the pay rates. Clicking on this icon will display a context panel which details how the hourly rate for employees' annual holidays has been determined. It is broken down into 4 sections. The average weekly earnings, the ordinary weekly pay 4-weekly formula, the ordinary weekly pay agreed rate, and the pay as you go 8%. You will notice the different colour text, so black and grey, in the context panel. This is based on the selection within the employee's leave pay rates for the OWP calculation method. The selected calculation method for OWP will display in black text, whilst the non-selected OWP method will display in grey text. The reason being for this is should the employee's work pattern change during the pay run period, you can override the equivalent earnings line pay rate to the non-selected OWP rate if required. This will save you from going into the employee's profile, into their pay rate settings, and updating the calculation method and rerunning your pay run. The average weekly earnings, also known as AWE, is calculated using the employee's gross earnings over the 12 months, just before the end of the last pay run before the annual holiday is taken, divided by 52, and then dividing the total by the employee's standard working hours per week. The ordinary weekly pay, also known as OWP for weekly formula, is calculated using the employee's gross earnings over 4 weeks before the end of the last pay run before the annual holiday is taken, divided by 4, and then dividing that total by the employee's standard working hours per week. The OWP agreed rate is the employee's normal hourly pay rate, as this is the amount the employee would expect to receive. If an employment agreement has a special rate for ordinary weekly pay that is an amount other than the employee's primary hourly pay rate, this rate must be compared, and the greater of the two amounts must be used as the ordinary weekly pay. You can apply this special ordinary weekly pay agreed rate by overriding the equivalent earnings line rate within the pay run. Regarding the pay-as-you-go 8% section there, this information is relevant for casual employees where the 4-week annual holidays does not apply to them. As such, they receive 8% of their gross earnings per pay run. Then when daily based leave is taken, such as sick leave, clicking on the eye icon will display a context panel which will show both the relevant daily pay and the average daily pay calculations. The calculation method selected within the employee's leave pay rate section will show in black, and this will be the default pay rate applied for the leave type within the pay run for the employee. The calculation method not selected within the employee's leave pay rate section will also display in the grey text. The reason being for this is should the employee's work pattern change during the pay run period, you can override the equivalent earnings line pay rate with the average daily pay rate if required. Once again, it just saves you from going into the employee profile, into their pay rate settings, and making the calculation method change. For relevant daily pay rate, this is the employee's normal hourly pay rate, as this is the usual amount the employee would expect to receive. An employment agreement may also specify a special rate of relevant daily pay. This can only be used if the rate is equal to or greater than the actual relevant daily pay. For average daily pay, this is calculated by using employees' gross earnings over the past 52 weeks, divided by the number of whole or part days the employee worked, including any paid leave or holiday during that period, then divided by the employee's standard hours per day. Moving over now to the Actions button. This is a very handy one to be aware of with the number of actions available. Here you can do things like add earnings. This is handy for paying earnings that are a one-off instance like overtime. To do this, you would click on the Add Earnings option, and you can see that it's created another earnings line. You will then just pop in the required details for this extra earning line. For example, here I will select a pay category for the public holiday worked and add in the number of hours. Click on Save, and this has added these earnings to the employee's total. So that covers all the details in the pay runs. So all that's left to do now is to finalise it. To do this, you will need to click on the Finalise option, and then you will see this pop up where you will need to configure the payslip and notification options. Publishing the payslips for employees is making them available for an employee to be able to access and view or download. You have the first option here, which is not to publish them, and then the second option will publish the payslips straight away. If you select this option, you also need to configure whether or not the employees will be notified that their payslips are available. The last option gives you the ability to publish the payslips at a time in the future. For example, if you want to finalise your pay run on a Friday, but you don't want your employees to be able to access the payslips until the following Monday, you can set this up here by entering the required date and time. And again, also configure if you want the employees to be notified. I'll also just mention at this point that if you have elected to publish the payslips but not send the notifications, the employee won't receive their SMS or email to let them know their payslip is available. But they will still be able to log into the employee self-service portal or WorkZone app and view or download their payslip. Once these options have been configured, you can then click on Finalise. This will finalise the pay run and publish the payslips if this is what you have selected. And now this is what your finalised pay run will look like. You can see here a few things have changed. You can no longer have the option to delete the pay run, and the payday filing is now available, which leads us into the next process, lodging the employment information payday filing. To submit the employment information, click on the payday filing button here. Clicking on the payday filing button will take you directly to the payday filing reporting page. The first time you are using the IRD Gateway service, you will need to connect to the service, which was previously shown in the new or departing employee details report. As we had already connected to the IRD, we do not need to connect again. If you didn't have any new or departing employees to report, and this is the first time you are connecting to the IRD Gateway after a pay run, then the same process as shown prior is to be followed. When you are ready to lodge the payday filing employment information, click on the Submit Payday Filing button. Once the payday filing employment information has been submitted successfully, the status, lodged by, including the date and time of submission, and the IRD receipt number are populated. If you have submitted an employment information and need to make any changes to an already finalised pay run, you would have to unlock a pay run and make those amendments. Once you have made the required updates, recalculated and finalised the unlock pay run, the payday filing amendment button will appear. I'll show you how to do that right now. So go back to the pay run and unlock the pay run. Once you have done, finalise the pay run. notice that this is now called the Payday Filing Amendment. Once again, clicking on the Payday Filing Amendment button will take you directly to the Payday Filing reporting page. You will notice a status of amended and the payday filing history of the original employment information file and the amendment file. Any amendments will show in red text. To submit the Payday Filing Employment Information Amendment to the IRD, click on the Submit Payday Filing button. Once the Payday Filing Information Amendment has been submitted, the status, lodged by, and receipt number will be populated. You also have the ability to also check the original payday filing that was submitted by clicking on the link here, which will detail the original lodgement. And also by clicking on the amendment link here, it will take you to the amendment. For both the employment information and amendment payday filing, once a return has been filed, it can take up to 24 hours or longer for the status to change. You may wish to contact the IRD to follow up on the processing of your payday file. The Check Now button with the status line allows you to check the polling status updates from the IRD. Once payday filing is processed by the IRD, then the status will be updated from submitted to submission received. That is the end of the New Zealand Payroll Basic webinar. Thank you for your time to attend and listening to this webinar. Any questions, please contact your payroll provider.